अस्सलामुअलैकुम नाजरीन, मैं आपकी होस्ट ताबिश खानज़ादा आपके साथ एक बार फिर कैनेडियन टैक्स सिस्टम्स के बारे में प्रोग्राम लेकर आई हूँ। आपका बहुत बहुत शुक्रिया, आप हमारा प्रोग्राम बहुत सराह रहे हैं, लेकिन इसके साथ साथ हमें कुछ रिक्वेस्ट्स भी मौसूल हुई हैं कि हम अपना प्रोग्राम इंग्लिश में कंडक्ट करें ताकि ज़्यादा से ज़्यादा लोग इससे फ़ायदा उठा सकें। तो इंशाल्लाह आज से हम अपना प्रोग्राम इंग्लिश में कंडक्ट करेंगे। सो लेट्स बिगिन बाय इंट्रोड्यूसिंग आवर गेस्ट मिस्टर मलिक हामिद इकबाल। अस्सलामु अलैकुम।
Walaikum assalam.
Mr. Malik is highly qualified and highly experienced in his field, and he's associated with M&N Chartered Accountants Inc. So before we proceed with our program today, let's learn a little bit about M&N Chartered Accountant Inc.
M&N Chartered Accountants Inc. is a full-service accounting firm, and we provide different services, which I'm going to explain after that. And as far as my qualifications are concerned, you have very kindly mentioned them, and they are on the screen as well. So coming to our program, when this program was scheduled, we thought that, okay, what should we share with our community? And the idea was that we should share, since tax season is coming, so we should provide taxes information to our community so that they can make an educated decision. But I would like to mention this thing to our viewers, that when they are applying these rules, these guidelines, they should seek a professional help, because each situation is different. Each business is different, every business is different, and every self-employed person's case is different. So they have to avoid to gain maximum benefit out of these rules. They should seek professional help. They can contact us as well, and our number is also given on the screen, and it is 647-299-3956. Our services, we are providing services to small businesses and self-employed people, and also we do corporate taxes for small businesses and self-employed people. We do bookkeeping and payroll, GST, HST return, new business setup and business plan. We prepare business plans for our clients as well, and audit representation. If CRA is auditing any client, we help them as well, so that CRA can get the proper information at the right time, and the client's record gets straightened out. Right. So these are the things which we are providing.
Excellent. So M&N Chartered Accountant Inc. is a full-service accounting firm, and you can contact Mr. Malik at 647-299-3956, or you can also email him at taxes.can@gmail.com. Our topic today is registered saving plans, which is of interest to almost everybody. So let's go ahead and learn a little bit about these plans from Mr. Malik.
Thank you. Registered saving plans are saving plans by insurance companies, by banks, by trust companies, which are designed so that the people can make the investment and the money grows into that. And if they are registered by CRA, they are called registered saving plans, retirement saving plans. Now, this provides an excellent system or mechanism of tax deferrals. Now, what happens, let me explain it briefly, that how tax deferral system works. It is when somebody buys Rrsp and he claims it in his tax return. So what happens, out of his total income, his Rrsp is subtracted and net income is reduced. Right. So if he had not bought Rrsp, he would have been charged tax on the higher income. Now, after deduction of Rrsp from the total income, what happens, that income is reduced, and once income is reduced, then the tax is also lower. It is taxed, but when Rrsp is withdrawn, as the name says that it is retirement registered saving plan, the understanding is that the people who are buying this Rrsp, they would be keeping this money into Rrsp, and they would withdraw when they retire.
Right.
So when they retire, the understanding is that the income would be lower, and once the income is lower, the tax would be lower. And when they withdraw Rrsp, the tax rate which they would have paid now and the tax rate which they would have paid at that time when the income was lower, it would be a very low tax.
Right.
Similarly, this grows, the income grows into it, and it grows very fast because there are no tax implications at this time.
Right.
So RRSP, as long as the money is in RRSP, it stays there and it grows, the interest and the profits and all that. There is no tax implication on that. So that increases a lot. So now what happens that in RRSP we can claim it or we can buy it during the year up to December,
Right.
and up to 60 days of next year as well.
Okay.
For example, if somebody buys RRSP, has bought in 2018, he can claim that 2018, but in next 60 days up to end of February, if they buy any RRSP, they can still claim it for 2018,
Great.
though they are buying it in 2019.
Right.
So that is a beautiful thing that they can take that advantage and they can use that. Now RRSP, how much RRSP should we buy?
Exactly.
It is a question. So CRA, on every notice of assessment, they provide the information to every taxpayer that okay, this much is their room, this much they can buy RRSP. So people have to buy within that room or up to that room. So they can buy it up to that room, but they should not buy more than that. If they buy more than that, then there is a penalty on that. Interest is charged because some people sometimes want to take advantage of that, but CRA has put this condition to avoid any unfair advantage. So they can use only the room which is given there, that this much. For example, I give an example that for example, if somebody has got a room or limit of $10,000 that he can buy RRSP $10,000, and he buys for $4,500 and $5,500 is left. So out of 10,000, 4,500 is bought, the remaining is left. He can carry it forward indefinitely.
Oh, okay.
He can carry it forward indefinitely, and he can claim that $4,500 in the year whenever he wants to, and that 5,500 would continue like that.
So there's one question. We will take that before we go to the break, and then we'll come back and discuss the rest of it.
Sure.
Devinder is 15 years old, and he has worked part-time and earned $5,000. He's wondering if he should file tax return this year because he's just 15-year-old.
He may, he can, and I think I would suggest that he should file tax return. The reason is that when tax return is filed, his RRSP room would be built based on his income.
Right.
So what would happen if he keeps on filing tax return? When he attains the age of maturity, then the room would also be there.
Right.
So that would be advantageous for him, and he can claim it.
Great, thank you.
So that is.
Thank you, Mr. Malik. We will be right back after a short break. We are back with our program about RRSP today. Our guest is Mr. Malik, so let's continue to learn a little bit more about RRSP.
All right. So now we continue on this, and when somebody can claim this deduction, so they can claim in the same year where they have, for example, if they have bought in 2018 up to December, they can claim that one, or if it is in the first 60 days of the next year, they can claim that as well. Or they can buy that RRSP and they can claim it in any subsequent year.
Oh, okay.
That is also, for example, if somebody has bought $5,000 RRSP and he wants to claim only $2,000 and he wants to keep $3,000 unclaimed,
Right.
so he can claim this $3,000 in coming years, next year. When he feels that okay, his tax rate is higher or his income is now more, so he can claim those $3,000 in those years as well. So this is when they can claim it. Now coming to unused contributions. As I mentioned that he can claim, for example, we had that $10,000 room RRSP, and he bought 4,500, 5,500 would be called unclaimed contribution, right? So he has unclaimed, unused, sorry, it would be termed as unused RRSP contribution, which he can use it in the next years whenever he wants to.
There's a question from Mr. Rauf, and he wants to save some money in RRSP, and he wants to claim when his income would be higher, so that the tax savings will be higher as well. Can he do that?
Yes, he wants to save money in RRSP. He wants to claim when his income would be, and he wants to carry it forward, in other words. Sure, he can.
He also wants to ask that he has about $25,000 in his savings account, but the room that is allowed for his RRSP is only $8,000. He's wondering if he can use all of his $25,000 in purchasing RRSP.
Okay, now here it is a technical thing. For example, he has a room of only $8,000.
Right.
Though he has money in his bank account of $25,000, he cannot buy for all $25,000. He can buy up to $8,000. CRA has given a limit that if somebody wants to buy little more, they can buy little more, not much. And 25,000 is a big amount. So if he buys 25,000, then there would be a penalty, and interest would be charged on that. So he can buy up to $8,000, not $25,000. So it is not. And now, this is there are two terms which are called unused contribution versus excess contribution. Now, unused contributions, I discussed that, okay, if he has contributed in RRSP, and for example, he bought $10,000 of RRSP and he used only $6,000, $4,000 is left. So 4,000 would be considered as unused contribution. So he has contributed, but he has not used it in his tax return. So there is no benefit he is availing at this time, but he can claim it afterwards in next subsequent years. So he can claim it. That won't be an issue. Excess contribution is different. Excess contribution is that if somebody has room of $8,000, as Mr. Rauf's question, we go back to this question, and he wanted to buy $25,000. In case he would have bought $25,000 worth of RRSP, that would have been excess contribution. And in excess contribution, then there are repercussions that penalty would be charged, rate of interest which is higher, so that doesn't really make any benefit.
Right. We have a question from Mr. Rajput, and he has about $10,000 room for RRSP, but he has only $3,000 in his bank account. He's wondering if he can borrow $7,000 from the bank so that he can invest in RRSP.
He can borrow. He can borrow, of course. If he has $10,000 RRSP room, he can borrow $7,000, because $3,000 is he has in his bank. He can borrow for $7,000, and then he can put $10,000 in his RRSP.
But so what about the interest? Can he deduct the interest expense on his return?
Interest expense on the loan borrowed for RRSP cannot be deducted.
Okay.
If our viewers look back in one of our programs where we discussed investment income, in investment income, if somebody takes loan and buys stock or GIC or any other investment, and when that income he receives, he can charge the interest expense or he can deduct it from there. But in RRSP, they cannot. So anything which is out of RRSP, they can deduct the interest expenses, because that they put it to generate income.
Right.
RRSP, though it is generating income, but this income is tax free. it grows like that.
Right.
So that is the beauty that in RRSP, and similar, therefore, the reason is that government doesn't allow that if somebody takes loan to buy RRSP, then it cannot be deducted.
Okay. Okay. Thank you very much, Mr. Malik. We have lots more to cover for RRSP. Our program time is almost up. So we will continue this discussion in our next program on next Monday at 9 p.m. at eAwaz. You can refer back to our other programs. They are available at the eAwaz YouTube channel as well as on the eAwaz Facebook page. So until then, please take care of yourself. And if you need to reach Mr. Malik, you can do that at 647-299-3956, or you can also email him at texas.can@gmail.com. Thank you. Thank you, Mr. Malik.
Thank you. Assalamu alaikum.
Assalamu alaikum.